Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with mixed news about how the world's factories are faring. First up today, we need to report that the closely watched US ISM factory PMI undershot expectations, and those expectations were for a contraction anyway. Weak new order flows and production levels were behind the Dow result. They say almost every component is contracting and that customers are letting their inventories shrink. Costs and prices are rising, however, although at a slower pace. They're being held up by own gold tariff taxes. And it was a data report that took the wind right out of Wall Street's Monday session. But that is just one view. The alternate S&P Global Factory PMI records an expansion in the sector, although it agrees that costs and prices are rising faster than normal. Both surveys noted that employment in the sector has stopped expanding. And the Canadian Factory PMI, which has been negative all year, seems to have stabilised. To be accurate, it's still contracting, but is back on the cusp of stabilisation, which they haven't had in 2025 so far. Likewise, the overall EU factory PMI is stable, neither expanding nor contracting overall. Germany and France are recording small contractions, but less than previously, while there are expansions in Spain and the Netherlands. Greece, again, recorded the strongest expansion amongst EU members. In China, their factory sector is still expanding, although at a slower pace, according to the S&P Global Factory PMI. New orders for domestic customers rose, but new export orders fell at their fastest pace since May. The similar official survey had this sector contracting. And the same S&P Global Factory PMIs for Taiwan, Korea and Malaysia all contracted, even if only slightly, but this measure for Indonesia turned up more positive. In Vietnam, the upturn was sharp, hitting a 15-month high. But the S&P Global Factory PMI for Australia is sounding a bit more of a warning. It recorded its first fall in manufacturing output in 4 months, driven by the fastest retreat in new orders since December 2024. Employment headcounts declined for the first time since February. And staying in Australia, there was more evidence of higher and rising inflation, although this data isn't really sounding warning bells. The Melbourne Institute monthly inflation gauge recorded an increase in monthly inflation in October, primarily influenced by higher recreation and housing-related prices. The monthly cost of living also rose. Annual headline inflation, as recorded by the inflation gauge, is slightly above the top end of the RBA's 2 to 3% target band. Australia also released September residential building consent data yesterday, and it jumped 12% from August, up 15% from September a year ago. This activity has been particularly volatile over the past few months, so the September surge is actually more of a recovery rather than a serious push higher. Much of their recent gains are for townhouses and apartments. The most impressive gains are in Victoria, where a real resurgence seems to be underway. Job ads fell in Australia 2.2% in October from September in the ANZ Indeed tracking, following a revised 3.5% drop in the previous month. This marked the fourth straight monthly decline, reinforcing signs of a loosening labour market despite elevated inflation. So it'll be no surprise to know that household spending in Australia is rising at only about the rate of household inflation. And it'll be inflation's rise that'll be at the heart of what analysts will be looking at in this afternoon's RBA rate review. Markets don't expect any change in the 3.6% cash rate target, but they do want to see how the central bank plans to tackle the resurgent inflation threat. And globally, we should note that the 12-member CPTPP is about to grow again. Costa Rica is in the final stages of joining, and now the Philippines and the UAE have applied, which will take this group to 15 members. It seems multilateralism is far from dead, even a group like this with relatively high labour and environmental standards. In the background, there is always rumours that China wishes to join too, although that never materialises. They prefer their own captive 15-country RCEP with its lower standards. 7 countries are members of both, including Australia and New Zealand. The US Treasury 10-year yield is now at 4.11%, up 1 basis point from yesterday at this time. And the price of gold will start today at $4,007 an ounce, up $6 from this time yesterday. And American oil prices are 50 cents firmer at just on $61.50 a barrel, with the international Brent price just over $65 a barrel. And the Kiwi dollar is now just under 57.1 US cents, and down almost 20 basis points from yesterday. Against the Aussie, we're down more than 10 basis points at 87.3 Australian cents. Against the euro, we're also down 20 basis points at 49.5 euro cents. That all means our trade-weighted index starts today at just under 61.7 and down 10 basis points from yesterday. And the Bitcoin price starts today at $106,767 and down a full 3% from this time yesterday. Volatility over the past 24 hours has been moderate at just on plus or minus 2.4%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora. Kia ora. I'm David Chaston, and we'll do this again tomorrow.